with the valuation course. The first course was only a curtain raiser, and there are quite a few of the changes that we have made in the present batch, especially the Chennai course. Normally we used to follow the pattern in which I have told you in the last class what are the course contents as such, but the chairman wanted a different perspective for that one. So last class it was only an overview of what is expected from our side and what is expected from your side also. As I told you, unless the research report is very, very essential, I gave you a background of what is expected in the project report. So after finishing a project report, only the examination will follow. This is a very good system in the sense that most of the candidates after attending 7 classes find it very difficult to finish up the project report. So we thought that participants should be given time to finish the project report, and then we will conduct the examination one. Examination I've already told you, 3 sets of question paper I've already given to you. Just go through about it, and what are all being discussed in the class is only the matter of examinations only. The chairman also gave a brief idea about why this examination, and more importantly the project report. Today we have with us Mr. Naresh Phanfat from Bangalore, a chartered accountant having 14 years of experience, and he is also a certified valuation manager given by the certified financial manager from the Center of Financial Management run by Dr. Prasanna Chandra, a very notable professor from IIM Bangalore. What we have done today is that the topic slightly gets changed to one. You know that the financial statements has also undergone a very sea change with the introduction of the revised Schedule 6 with current and non-current items. Normally we'll begin with the introduction to valuation, then valuation concepts, valuation techniques, then we'll jump on to the valuation of bonds, ESOPs. Slowly the chapter will end with the last chapter being the valuation of intangibles. The felt things are being taught first, and the things which cannot be clearly seen will come in the last one. But today you should bear with us that the things which cannot be seen, which can only be felt, is being taught today, nothing but the valuation of intangibles, which is one of the very, very core items of the valuations. All the items, it can be clearly seen, there are financial statement and facts and figures. But I have, to my personal point of view, when I come to the valuation of intangibles, it's a very hardcore aspect. Perhaps I feel this is the only area as a valuation expert, you should have a very domain and in-depth knowledge about the subject. Perhaps we are also finding it very difficult to get faculty on an all-India basis, especially to teach this valuation of intangibles as well as the valuation of stressed companies. The two topics are very difficult and high core area. Thanks to the efforts of the committee, we are able to get Mr. Naresh through some email or other certain things to be transparent of the matter about the high values what Naresh is. He wanted to become a participant in this course. So it happens because we also gave advertisement on all-India basis we wanted, but having seen his profile, we thought that he should be on the other side, not on this side. Thank you very much, sir, for taking an interest to attending the subject, but it has been...
I wanted to participate, I participated and already cleared.
See, these things are also here he participated, but having got an XP, is a certified value research. So we thought to utilize his services for the Chennai batch. So he's another new brand of faculty which have added. Very limited resources we have got in faculty. That is the problem in this evaluation as compared to any other certificate courses which have also handled. We are able to get so many faculties like IFRS and concurrent audit or Forex derivatives, so many things. But when it comes to valuations, we have people, but they are not expertise in the core area of the topics which have listed out. That is why we depend upon the faculty, and only when the faculty is available, only we start the courses as such. I do not want to take up much of a time. Mr. Naresh will again give an overall perspective of the valuations as he been trained and experienced in this one, and then he will touch upon the the more core important as valuation of return. Over to Mr. Naresh. Thank you very much.
A very good morning again to all of you. It's a small room. Can I? You have it. Like Mr. Giridharan already mentioned, that valuation is assuming big proportions now, and it's a very lucrative field of service. I would have thought that valuation of intangibles should be done towards the end of the program, because this is one of the high-end programs, more complex than a normal business valuation or a normal asset valuation. But I think there's some sort of arrangement between the faculty and the institute, and Mr. SK also mentioned and Mr. Giri also mentioned. They said, can you begin with this topic? I said, I can. So Mr. SK mentioned that I can begin with an overview of valuation, so that can help the cost better. I thought before I can begin, if I can know how many of the participants present here have had the chance of valuing businesses in their professional practice, or have anybody of you done valuations already? None?
We have done to the limited extent of doing the future projections and then putting a value for the businesses where we work, not for private placements or from the equity perspective. From the debt perspective, yes, we have done.
Yes. Okay. But intangibles, have you? No. Okay.
I have done valuations,
Right.
including for FEMA, using DCF,
Yes.
or for mergers, and determining the swap ratio.
Okay. Very good. But the good thing is, majority of the participants have not done, so I can take it a bit easy. As such, the topic is evolving, valuation of intangibles. When I say intangibles, we'll see how we can even factor in IPRs, intellectual property rights, and we can see how we can value those also, because that is where the big sort of chunk of value lies, right? If I can, are we waiting for more participants, or we can sort of
3 or 4 people.
3 or 4, but we'll have a casual. If I can request each one of you to take like about 1 minute and tell me about your past background, so I can structure the program better in that sense. I mean, what other qualifications you have? Are you in corporate or you're in practice? And what's the like core line of activity you people are in? You can begin from the end, please.
My name is Mr. D. Prasad.
Mr. Prasad.
Yeah.
Hi.
I am working in a Dutch company. I am currently looking after all taxation matters.
Taxation. Okay. And what makes you join certified valuers? Or?
I want to go to practice, and I plan to go to practice after some.
Great. Very nice. Prasad. Yes, please.
Ravi Kannan. I work for a German company,
Yeah.
finance director,
Yeah.
and it's all aspect of financing that I'm in charge of. What made me interested in this course to exhaust the budget.
Okay.
Training, so I have to take
Okay. Good. Thank you.
I'm Janaki Raman.
Yes.
I'm working as CFO and Company Secretary in Malay IPL Limited. It's a German and amalgamation kind of shareholders.
Fantastic. Okay.
As far as the valuation is concerned, yes, being a German company, we do every year valuations. As a company, business valuation, we do that, getting audited through some Big Four and send it across. Apart from that, we also do shares whenever the inclusion, private placement, all that.
So you help the independent valuers value the business.
Yeah, we have a tool where we value the things based on DCF method.
You have a tool for DCF valuation. Okay. Okay. We'll talk about how.
It's a standard tool prescribed globally. So.
We'll very soon talk about how tools can be like very handy, and at times sort of absolutely taking you to a different tangent. But anyway, thank you. Yes.
Naganathan in practice, basically in internal audits mostly.
Internal audits.
Yeah.
Wow.
But I don't know why it attracted me somehow. I thought I'll join this.
Very good. You're in your own practice. Right. Very good. I'm just trying to see if all the experiences are unique or we get some commonality. Yes, please.
I'm Balavendra.
Yes.
I'm working for a private
taxation is. Okay, got
Recently
it.
attended IFRS course where we read from standard 1 to and they have been talking about fair value and valuation.
Fair value.
So let me also try to get some time of that.
Yeah.
Because it's emerging evolving area. So
Yes.
I don't want to discuss.
We'll soon see how that's a myth. Fair value, fair market value, why that's a myth, that valuation is about fair value. But we'll come to that. Good. Okay, please.
My name is Pravesh.
Pravesh.
I worked as a tax consultant with SR Bandipur. And now I'm
Understand.
doing my individual practice.
Very good.
And I'm specializing in direct tax and FEMA.
Okay.
Of late, I've been approached for DCF valuation. I've assisted a few auditors who do DCF valuation.
Yeah.
But I myself am not an expert in that. So
Good.
look at that.
Okay. By the way, all of you are from Chennai? Anybody from outside? Right. Please.
Pari,
Mr. Pari.
in practice for the past 20 years.
Wow.
Main core is taxation. Recently we are handling some JV companies and we are getting opportunities of valuation also.
Mm-hmm.
Profession in my practice I have joined.
Fantastic. Now this is getting tax heavy, I think. Yes, please.
Hi, my name is Pradeep.
I met you. Yeah. That's great.
So I'm in practice last 6 years.
Tax? No.
Yeah, into tax.
Okay.
Just finished my certificate course on international tax and joined this.
Wonderful.
And why I joined this course is want to make some value out of it.
He wants to take a value out of the valuation course. Very good. Very good. Yeah.
He's
Nice.
the instrumental for joining me also.
Wow.
Taxation together.
Mr. Giridharan should look for more people like him, so he becomes an inspiration for others too. Yes, please.
I'm Chandramouli, working as a DG in finance in Arcade Group of companies. Basically, I'm a finance man, so like to, in fact, from June 2010, I have been following up this valuation course to be conducted in Chennai. I paid the fees, got refund because nobody else joined. Finally, thanks to Mr. Giridharan and Mr. SK, now we are here.
In Chennai, but I thought, Mr. Giridharan, in Chennai,
It's not a fit. All other cities, it's a record break.
I thought in Bangalore we started the latest.
Southern region,
So when did it start in Chennai, this book?
Chennai after, I think, more after the last international conference was supposed to be held. After 1 year, we are having.
So this is the third batch,
The
second batch?
Second batch.
Second batch. Okay. Okay. Very good. What makes you join this program? We've already done some valuations, you said, right?
Yeah, I've done a number of them, but then I thought a better perspective with a little more education will help.
Right. Please. Thank you. You. Good. So I thought there'll be a good sort of diaspora of services, but I can see at least half or more than half of them being, tax-related professionals. So I would like to begin the presentation by a caveat, saying we avoid tax, at least the integrities of tax, because I'm no tax expert, sort of thing. We will bring tax to the extent it's relevant for our valuation, but we will keep it core finance valuation, that to intangibles, intellectual property rights, how to value. But like I mentioned, since this is the higher end of valuation, it would help the cost better if we begin with a broad introduction of valuation. Then I take you to what intangibles actually are, what are the various forms of intangibles available today, including IPRs, what the broad methodology could be to value them. And this is not like a college classroom. I'm sure all of us are experienced professionals. I'm sharing my sort of professional views about it, because when I was with PwC London, we had the experience of working with working with a group which were trying to do a joint venture to the extent of $20 billion. And there we worked on identifying intangibles and IPRs. So I can share some of the sort of approaches and methods that we used there. Right? I see some new participants also have been introduced to each other. If you don't mind, can you take 1 minute of your time and let me know what's your name, what do you do?
I'm JB Prasanna. I qualified to CA in 2011. I'm working in an audit firm right now. As part of a transaction support service team, which we have clients in the merger efficient and also valuations. So I thought this course would be
Mr. Prasanna, is it? Okay, thank you very much. Can we have this one? It's showing up. better. Yeah. The disclaimer, views expressed are my personal views. They don't represent the views of any other professional body in the world. An audience to exercise professional judgment before relying upon anything that we discuss here. Yeah. So maybe the last but one thing helps me because it got tax heavy. I'm saying tax treatments majorly excluded. So that's one caveat. There's some expectation setting for the program. One is it's an evolving sort of primer. It's not going to be a definitive end in itself, saying okay, we did this valuation program, these are the intangibles, this is how we value only, right? So it's just a primer and the subject itself is evolving. Believe me when I say nobody in the world can command absolute mastery over this is the way to value. Every valuation will be subjective. There was in fact a case in point where a particular company got second opinion, third opinion, and the valuation range was from $200 million to $1.5 billion. And all were like, big fours and experts and all. So that's the level of digress that we see in valuation itself. I've tried to keep today's presentation less technical, as in jargon free, because let's understand from the basics. The world is facing whatever troubles it is facing today because of over innovation, right? All sorts of terms, leveraged buyouts, hedging, hedge funds, any and everything. You need it, we create something. So let's sort of wind back into time, understand from the basics. That's one endeavor I'd prefer to make. I've sort of tried to make it a bit pictorial for aesthetics and better appeal. So, and we'll try to see if we can, I can show you some related videos which will help the cause better. And there are some illustrative models which I worked on valuation, which we can see. IFRS reporting, we do an overview of IFRS reporting also, because ultimately it's no point just how we value. If we can broadly also see what gets captured and what still remains outside IFRS. Tax treatments excluded, thankfully. And it's practice oriented. We'll try to see how we can take nuggets from here, and we'll try to see how we can apply this in our day-to-day life, right? This is the expectation setting with which I have come. If there's any specific thing in the minds of people here which you think we can cover in today's topic, maybe I can touch upon. If there's anything you want to add up in addition to this, yeah?
What request is that less technical. When you use some abbreviations, first time at least you tell what is that, because if you use some abbreviations.
Yeah, okay, good. I'll do that. But that's what I mean when I say less technical. As less abbreviations as possible, as less pickups from IFRS and this technical material as possible. We'll understand from the grassroots level what things are, how they are represented, whether they are represented or not, and how we can do things better itself, right? Because the field itself, the first one says it's an evolving thing. That's a good point. I'll see. If there are any abbreviations, I'll clear that, right?
Please take us through a report.
A report, yes. Hi. Report. Okay. I'll give you in a nutshell what the contents of the report will be in a standard format. Yes. Sorry. Can you introduce yourself, please? Yeah.
Yeah. Myself. My name is Babu.
Mr. Babu. Yeah.
Yeah. I'm working as an assistant general finance and Anju Foundation. So it's a construction company. So I've been working there for the past 1.5 years.
Yeah. What makes you register for this program? I think this question Mr. Giridharan would like to know more than me. What makes people join so that we can do things
from the labor countries like Dutch, German.
Yeah. It's general interest or anything in particular you thought? Okay, good.
Don't worry, we'll not protest.
Right. Law lexicon, like we have an Oxford dictionary, for any sort of standardized meaning in English. Anything related to law or technical sort of terms, electric law lexicon is one primer that we follow, one standard that we follow. According to that, valuation is defined as a process of determining the current worth of an asset. Now please pay attention to the terms or the words that we have underlined. First one is, it's a process, right? The entire process has to be followed. If we have a template, for example, if we just use some data and input in that template, saying this is a standard tool we've been using for the last 5 years, it throws up some value, it does DCF, there are market multiples here, we use it and this is the value, there's a problem. It has to undergo that rigorous process. And when I say process, it has to begin with understanding what is the purpose, what is the requirement, from whose perception we are valuing, what is going to be the utilization of the report, how it is going to be used, and then begin with the valuation. It's a process. And then the second thing that I've underlined is current worth. So when we talk about valuation, it's as of now mostly. There can be backdated valuations, but we keep it as current as possible. That's the idea. My point is, there's no point in doing a valuation as of 30th June 2005, because that should have done there. Should have been done at that point in time, unless we are in a sort of litigation sort of claim. For example, the spectrum allocation, that you do an audit, you do fact finding, and then see what would have been the value at that point in time, which could be relevant in some cases. But in majority business valuations, in general, we do the current worth, or even if it's backdated, we try to see if it's as recent as possible of an asset. Generally, valuations are done for assets, and the way it is done is, when I say assets, I mean net assets. And net assets gets broken into your asset side and external liabilities. So the connotation here would mean net assets. Generally, that's how it's depicted, the value. Very clear. At any point of time, feel free to stop me. Anybody can raise your hand, we can discuss, we can share our professional views. It should not be a one-sided sort of presentation. I would feel happier if we can exchange our views, so that we take better value out of the valuation course, right? Can you take a moment to introduce yourself, please? Yeah. Yes. What makes you join this program?